Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin
This is a volatile puppy here, isn't it?
and Dennis Dick,
I'm bidding a penny. I will buy the stock for a penny.
with everything you need to start your trading day.
Good morning, everybody. Welcome to this Wednesday edition of Benzinga's Pre-Market Prep. Spencer Israel, Joel Elconin. Well, this morning I learned that apparently the FTC has the power to retroactively reject mergers, which is what we're talking about here with Facebook. A report from the New York Post that the FTC is considering blocking the Facebook-Instagram merger from 2012. So we'll talk about the follow-through in that. We have a number of interesting earnings this morning, most notably Weight Watchers, Papa John's, GW Pharma, Palo Alto, Toll Brothers. This morning we've had Best Buy and Campbell's and Lowe's. So a number of earnings on our radar, and in line with the theme of retail, we're pretty much in a retail earnings season now. So we're going to have Ryan Craver on the show 8:35 today. He's pretty much our retail guru, and he will walk us through which retail companies are best positioned and worst position going forward, and he'll highlight their trends in year-over-year comps and talk about just pretty much everything with the retail sector. That'll be at 8:35. Joel, what is the word here in the overnight session?
I don't know. Maybe I need to reboot my computer because there's some red on the screen. I didn't know that could actually happen. We're down 7 handles here at 27.84 and a quarter. Pre-market high matched the close right there at 93 and a quarter. Pre-market low 80.50. We are leaking towards that area as we speak. As far as daily lows go, not seeing much on the daily chart. You have Friday's low at 27.70.50. That's only 15 handles away. Crude nicely shaky off the Trump tweet, found support at the former top of that trading range at 55.02. We're right back on the 56 handle, up $1.28 at 56.78. Your 3, 4, 5. Wow, look at all those highs, man. You got 1, 2, 3, 4 highs in the upper 57 handles. If we get to 57.30, 57.40, have some offers out there. Gold up 220, 13.30, 60. Silver just slightly in the red. The metal's not moving after that big move that we had last week. But Spencer, this is our last day of being dentist free. Are you looking forward to having Triple D back tomorrow?
I almost feel like we didn't take full advantage of being dentist free. I feel like we were really excited about it last Wednesday, and then last Thursday, and then now today, or as the days went on, we sort of got lulled to sleep. But we didn't really use our chance to make fun of Dennis without him being here. We didn't really get a chance to do any of that. I kind of wish we had done more of that. I guess we can do it today still. We have an hour here to make fun of Dennis.
Well, he'll have one good story or something. I mean, we'll wait from the trip. I mean, he's going with his kids and a couple other families and other groups of kids. I'm sure he'll have one good story for us. He's coming back today, and looking forward to having him back tomorrow. Well, we got a lot of earnings reports. We have some really good ones, and we have some really bad ones. Where do you guys want to start?
I want to start with Facebook, though, because this one really, one of the things I love most about this business is you really kind of learn something new every day. And today I honestly didn't know that the FTC can retroactively reject a merger that they already approved 7 years ago. And that is what the New York Post is reporting this morning, that the FTC has formed a new task force with the power to undo the Facebook Instagram merger or acquisition, I would say, from 2012. That they apparently had considered rejecting at the time, but decided eventually to approve. And I think now the government is realizing that, whoa, we maybe didn't regulate anything with regards to technology. We got caught flat-footed here with a bunch of these misuses of data, and so now every government is sort of trying to play catch-up here with regards to their regulations on big tech. This being one of those avenues they can do that. So Facebook was down about 1%. It's not anymore. It's come back here a little bit in the pre-market, but I was very surprised to learn that the FTC has the power. Apparently, they have 10 years, is what I'm being told. They have 10 years to retroactively reject a previously approved merger or acquisition.
All right, so then they would have to be a seller, huh? They would have to sell the company.
They would have to sell the company. They would have to sell the company, yeah.
Huh.
Or somehow separate it.
Do you use that at all, Instagram?
No, actually, I deleted my Instagram. I didn't. I had it. I never used it. So about a month or two ago, I just deleted it because I was never on it. So no.
All right. Well, I don't know much about the SEC or the merger or Instagram for that matter, but to me, Facebook just looks like it's begging to fill this gap here, and it's had its nice earnings pop, and actually was really hawking the 166 area because what that did is you had a high of the post earnings move at 172.47. You broke down to 159.59. 166 was mid-range. So I was thinking, that's your resistance. That's going to determine whether you go back out and take out the high. It hasn't happened. So, boy, I hope we get back up to that 166 area again. But to me, I just wait for this thing. I think one day, someday, you'll be able to buy Facebook in the lower 150 handle, 150.95. Might be a little bit dependent with the market rolling over. Which it really has. It showed a little weakness the last 2 days, but far from determining that this end of this rally is over. Pre-market low in Facebook stands at 162.21.
And you'd have to assume that this is not a story that is going to go away anytime soon. I think the general sentiment around the world governments is that they're pissed off at Facebook for a variety of reasons. Mostly around misuse of data, as we've covered ad nauseum on this show, and as you've seen ad nauseum everywhere you've turned in the last year plus. But this looks like it's not going to end anytime soon. They're in for a long fight here with the government on various fronts. Facebook is.
Yeah, that stock. I mean, it keeps shrugging these things off. Good earnings report. That's what the street cares about. I don't know. I say my target 150.95 in that one before we hit 172, whatever that high of the move was.
And it's almost like yesterday we had the healthcare companies testifying on Capitol Hill, and they basically said, we can't do anything, Congress, unless you change the law. If you change the law, we will do something. We will lower our prices, but no one is going to voluntarily lower their prices. It'll give us a competitive disadvantage. And I wouldn't be surprised if Facebook essentially says the same thing. We can't fundamentally change our business unless you make us, right? And they're fighting here with multiple governments on multiple fronts on multiple issues. So I wouldn't be surprised if we do get some retro. I don't know if they're gonna disapprove this or force Facebook to break up Instagram, but I wouldn't be surprised if we get some more legislation. I mean, we don't have any right now, so I wouldn't be surprised to see some legislation with regards to social media in general, and that would obviously affect Facebook more so than anybody else because they are the largest player in the space. Let's go to Weight Watchers. We should start as far as the earnings. We should start there because they got hammered. And so actually, I guess I can call them WW since that's their new name now. They changed the name. WW reported earnings after the close yesterday, and it was bad. The Q4 EPS, actually, the Q4 was it was okay. The Q4 EPS 63 cents versus a 60-cent estimate, so they beat that number by 3 cents. Sales was bad, $330 to $347 million, but their guidance was light. The fiscal year sales guidance they gave was $1.4 billion. Analysts were expecting $1.66 billion in fiscal year sales, and they essentially missed their numbers for their biggest quarter. So this is what the CFO said on the call. He said, due to the soft start to the key winter season, we expect member recruitment for 2019 to be below 2018 levels, resulting in lower revenue and earnings for the year. And you can see that on the chart here this morning, down to below 19.
Wow, wow. I don't know. This is a really interesting chart because we've gone down to 1890 and we're sitting, no, excuse me, 1865 is your pre-market low. And we're not really bouncing here. I don't know. I mean, more downside here for this stock, 30 cents off the low. There's some accumulation going on here. If you were fortunate to come in short this thing, I mean, wait to see what happens in the early action. Boy, just a huge drop. I have a April 28th low of 15.16. I don't think we would see that today. I think really the only way to, if you're trying to catch along in this thing or you're trying to cover short, there's really no level. I mean, I think what I would do, if I had 1,000 shares short, boom, have a little bit bid at the pre-market low. If you get hit that, drop it down 30 cents to 18.30, have a little bit at the whole number. And then if you're not getting filled on those bids and then a buyer comes in, then but at least having the orders out there, you at least know if people are still willing to hit the bids. And so you said on the pre-market show, Oprah she still owns a good chunk of this, right?
Yeah, she sold about 1 million shares. She originally, back in 2015, October 19th, 2015 to be precise, she had bought a little over 6 million shares, about 6.5 million shares. She sold about 1 million of them as of the end of 2018, but she owns about 5.4 million shares still in Weight Watchers. And if I pull up like a weekly or a monthly here, she's still in the black because she bought this thing at like $6 probably. But considering where this thing was,
yeah, boy, I mean, and she did. I just can't believe she didn't like buy some puts or sell some calls. Or she's a pretty sophisticated.
We don't know what she did or didn't do.
No, you don't. Do you want to try and get her on the show, Spencer?
Sure.
Holy mackerel! I don't know. That's a big profit, and she still has plenty of money, and who knows if she'll still do some more selling. I doubt she'll do any more buying. So if that chunk comes off the table, but she had a lot of room. I mean, this thing got up over $100, but right now pre-market low stands at 1865, and really had a little bit of a bounce off the initial report, made a low, and then got back over 22. But someone wants out, and they want out bad. And I guess if people, look at the food stocks. I guess people aren't eating food. So if they're not eating food, then they don't need to go to Weight Watchers. So I don't know.
It's just great. It just goes to show that, the question of when to sell is something that everybody struggles with, no matter who you are. If you're us, if you're Oprah, it doesn't matter. Knowing when to sell is the hardest part of this business.
Of course. And let's say I had the same stake that she had. I could be sitting here. I would have sold it at 40, 30, 40, and then watch it go up to 100, and then be crying in my, spilt milk, and then boom. But big hit. We'll see what happens. If you're trying to pick a bottom in it today, 1865 is your level to keep an eye on. Who's not eating food? Joel says buy_Apple. I am. I'm doing my best, but it's not affecting these stocks at all.
Well, it's funny because no one's eating Kraft Heinz, but who did we have yesterday that reported that we had Smuckers and they were okay, and then this morning we have CPB, Campbell's Soup, and they're okay as well. I'll read those numbers for you here in a second as I pull up the 15-minute chart. But CPB reported about 45 minutes ago or so for the second quarter. Q2 adjusted EPS 77 cents versus a 70-cent estimate. Sales of 2.71 versus $2.68 billion. So beats on both Q2 EPS and sales prints for Campbell's Soup. They did reaffirm their guidance for the fiscal year. The EPS guidance and the sales guidance was reaffirmed that they had previously given. So that's a good report there. So I guess they're not eating Kraft Heinz. They're eating jelly and soup.
And I thought the tomato rice soup is pretty good from there when you make the grilled cheese. So I do like that. This stock got pounded off the Kraft Heinz news, and whether it was warranted or not, we don't know. Got down, just kissed the low of the move. Let's see, the low of the move was 32.04. Had another low at 32.09. Where did you get to a couple days ago? Close enough, but no cigar. 32.17. You're now gapping into a gap area, so that's always makes trading fun. Your pre-market high, 34.90. That's an interesting area to me because 34.92. That was the high on the or that was the low before the gap down day with the Kraft Heinz debacle. So keeping an eye on 35 bucks. You get in, you get through that 35. I think the buyers will persist. Above 35, another pair of highs at 35.5. So there is some resistance here. It's a good report. Everyone that's sold here, I don't know if they're going to be just rushing and buying it back. But Campbell's Soup gets off the mat here. So good sign here. If you're on Campbell's Soup, congratulations. Brave move going into that report.
I'm just looking at the PBJ ETF, which is I think to my knowledge, the largest food ETF. And
Really?
I want to see what their holdings are. So
Okay.
Kraft Heinz is not in. I would have thought Kraft Heinz was in the top 10. They're not. Where are they? They're further down here. So yeah, this is not. This is more of a broader because the whole top holdings are Starbucks, Mondelez, Yum, Keurig, Dr. Pepper, and Cisco.
Yeah. The only problem with this thing, Spencer, trade by appointment only.
Yeah.
Traded looking on the dailies here, 2,700, 3,500. So if you wanted to go in with your 5,000 shares, you'd be having a block trade in there. So kind of thinly traded. That chart doesn't look too bad. We'll see what happens with now with had some support here. I don't think anybody's going to trade this. So
I'm surprised. Well, Campbell's, it has no exposure to Campbell's and Kraft Heinz. I would have thought it would, but I guess it doesn't. So anyway, moving on, away from Campbell's, away from Weight Watchers. Well, we had sticking with food, I guess, because we had Papa John's. Papa John's reported earnings after the close yesterday. The Q4 EPS, we knew it'd probably be bad, and it was 15 cents versus a 19-cent estimate. Sales of $373 versus $391 million. So a miss for both EPS and sales in the quarter for Papa John's. The guidance that they gave was light, a little bit light. $1 to $1.20 is the EPS range that they gave, and $1.20 was the estimate. Their comps for North America are going to be down. They guided 1% to 5% for the year. Their international comps will be flat to up 3% for the year. Those aren't great year. You want to see comp growth on a year-over-year basis, not comps declining. So between the earnings miss and the comp and the weak comps, not a good report, but I think we knew it'd be bad.
Yeah, this is getting it taken over, not getting taken over, yada, yada, yada. It goes up when that comes and then goes down when it drops. Big action, big old bar in the after hours trading. I'm not going to pay a lot of attention to that because I don't know how much volume traded on it. But on the downside, I have an area of interest, and that's under $41. Pair of lows, 40.89, 40.70. As you can see, there's your pair of lows, and then the big drop. So I would use that as support. Really not much here at 42 to speak of. The only thing, let's just use 42 as your swing number. Your last three closes flanked $42 on, let's see, today's Wednesday, Friday, Monday, and Tuesday. So using 42 as your swing number, 2-day high, 42.79. Don't look real excited about this report.
And I forgot to mention that they had a deal with Starboard, which is, of course, the activist investor involved here. So Starboard is going to make a $200 million strategic investment in the company's Series B convertible preferred shares. So that's still going on. We don't know the rest. And, of course, there's the lawsuit between Papa John and Papa John's. So we don't know how.
There's a lot going on there.
Yeah, a lot going on with PTZA. But we have a lot more earnings on our list here, and only 15 minutes to cover them before our guests.
Okay.
So let's go to one of the top gainers of the morning, Palo Alto Networks. Someone in the chat was asking, let me scroll up here. They're asking if they should fade this. Is this a fade or not? Well, let's find out here. The numbers that Palo Alto gave in their earnings report yesterday after the bell. Q2 EPS $1.51 versus $1.22. Estimate sales of 711 versus $682 million. Big beats for both of those numbers. They also reported $1 billion buyback. In addition, they gave some guidance. The Q3 EPS guidance was in line, and the Q3 sales guidance was in line, a little bit higher there. The estimate was at the low end of the range that they gave. So earnings beats on the EPS and sales, in-line guidance, and a $1 billion buyback. Great report.
I mean, did it pay to fade Roku after the gap up? Did it pay to fade some of these other things on the gap ups? I don't know. I mean, it's a tough business here. Going with the momentum, yeah, you could do with that. You're buying the thing up 25.5 points at 261 even, blowing away the former all-time high. If you do want to, try short in this thing, the pre-market high is at 263, but could just blow through that. I'm just going to give you 263, the pre-market high. Look for momentum through that. If you feel that you really want to short, maybe take the 10 or 15 minute low off the open and head it through that. But think about all the shorts that are out there. They're going to be trying to buy today as well. Really nice move. Is this move? I mean, some of the other ones have already reported. FireEye just kind of hanging out, not getting much of a sympathy off this. I think CyberArk already reported. That stock did well off its report as well. So holy mackerel. Nice move here in PANW.
Moving to the home builders here, because we had Toll Brothers reporting yesterday as well. As I pulled that up on my screen, Toll Brothers, TOL, reported a Q1 EPS of 76 cents versus a 61-cent estimate. Sales of 1.36 versus 1.26 billion dollars. So it beats on both the EPS and sales. For Toll Brothers and the home builders, their earnings schedule was a little weird. We've already had we had DR Horton on January 25th, and we had Lennar on January 9th. So the schedule for them is a little bit different than the rest of the earnings clusters. So I think you can say that they're all reported for the most recent quarter here. But let's see what Toll Brothers is doing, Joel.
Well, the good news is it's trading up 83 cents at 38.10. The bad news is it's faded off it at 39.50 high. And these things have done, home builders in the past a lot of times had these big pops and the fade. Is this the fade? Is it over from the 39.50 high? Well, we will find out. Just kind of hanging out right near the low. The low after the print was 37.67. So if you're playing the momentum here on the upside, just be aware that was the pre-market low or after hours low. Yesterday's close 37.27. But if you're buying this off the open, you surely don't want to see it below that pre-market low. And you haven't sniffed $40 here in quite some time. 39.80 was your August high. That's just called $40. I think you can resume the momentum, but the fact that it fell $1.40, I don't know how much actually traded on that initial print. Let me see when someone got real excited. I traded 15,000 shares, so some decent volume in the after hours. Things quieting down here a little bit in the pre-market.
How are you feeling about the home builders in general here? Lennar,
I don't know.
Brothers, DHI.
Let's go with the XHB.
Okay.
I mean, that chart looks pretty good, right?
They all look the same to me.
Yeah. I mean, it's trying. I mean, I can't remember who was loving this down under $32, but they're very cyclical. Interest rates, I really don't think are, running away north. So, I think interest rates are low. I think people are still building. The chart looks pretty good. It's on a recovery. So I don't know. I mean, I don't think we're going in like this massive recession or having a massive housing crisis. And that, what was this market before? So chart looks good. Let's see if we can just keep on going.
All right. I want to talk about GBT Pharma. This is the
Woohoo!
earnings report that came out was for last quarter, their first quarter that includes sales of Epidiolex finally got approved and went on sale last November. So we have 2 months of Epidiolex sales reflected in this earnings report for GW Pharma. And here are the numbers. They reported a 20-cent loss versus a 23-cent loss. Estimate revenue of $6.7 million versus a $5.35 million estimate. And that revenue number was a 67% increase on a year-over-year basis. Thank you very much, Epidiolex.
Yeah, trading at the highs of the after hours and pre-market session right here at 172. Let's see if this is continue to run here. Nice run into earnings as David W. just noted here. I'll give you the all-time high in this one. The all-time high was made in September, 179.65. But if you're looking for a level ahead of that, these are monthly levels, which I tend to give more significance. If you're looking for a little bit more of a target, reasonable target besides 179.65, your October high was 175. So see if you get taken out, and if we continue to go higher, see if you get taken out in an offer there. I think you'll be happy with it in a couple of weeks. As I mentioned, the all-time high, 179.65.
The company said in just November and December, they registered around 4,500 new patient enrollment forms, and Epidiolex sales amounted to $4.7 million in just those 2 months. So this is going to be we expect it to be a cash cow for GW Pharma going forward, and we'll see what they can report next in the next report when they have a full quarter worth of data.
What's Epidiolex here? Or what's it? I should know this. We've been talking about it for like 100 years. Do you know?
Feels like it, right? Feels like it. It's for seizures, I believe, right?
Exactly. Yeah. Okay.
Yeah, it's for epilepsy. And so it's the first cannabis-based drug approved by the FDA. We have been talking about it at least since I've been Zynga. And so the fact that it's finally approved and finally making sales.
In the pipe, yep. Out of the pipeline.
Out of the pipeline into the market. Bank of America, I saw they projected sales of Epidiolex to amount to it could have reached $2.2 billion by 2027. That's just one drug. So that's what they're projecting. We'll see. I'll let you know. Remind me in 8 years to follow up on that stat there from Bank of America's predictions of Epidiolex. But let's move on from GW Pharma here and go to, let's stick with the drugs and we'll go to Mylan. Mylan Labs had earnings after the bell as well yesterday. MYL Q4 EPS of $1.30 versus a $1.36 estimate. Sales were in line at $3.08 billion. They also gave some guidance. It was light. The fiscal year adjusted EPS guidance they gave a range of $3.80 to $4.80, and the estimate was at $5.04. So a light EPS guidance, and the sales guidance was in line, but a EPS miss and a EPS guidance miss as well for Mylan.
You know, this stock has been under pressure on and off ever since that EpiPen fiasco. Right. Remember that? Right. That was a couple years ago. I know that stock was at the $40 level, and it's just kind of never really recovered from that. They hit it, and they hit it good. They hit it under $27. They hit it all the way. What's your pre-market low here? $26.70. And where are these lows at here? $26.87, $26.98, 78 cents a pound above that. A lot of support here at 27, folks. I see 4 lows. This is going back earlier this year between $26.87 and $27.17. So let's just call it $27. We are 73 cents off that. I think as we go back in this one, if we do decline, then back and fill, I expect to find bids ahead of the pre-market low. If you're looking for a minor resistance point, since you made that low, we were stopped at $27.98. So if shorts are going to be covering on a rally, it will be above $28. But let's keep an eye on here on Mylan Labs.
All right, we have 5 minutes before we're going to bring on a retail expert. So let's use those 5 minutes to talk about retail stocks. We have TJX just out here a few minutes ago. They reported their Q4 EPS, adjusted EPS, 59 cents versus a 68-cent estimate. So a miss there on the EPS for TJX. The sales was a beat, 11.1 versus 11.01 billion dollars. The Q1 EPS guidance that they gave was light by a few cents. 53 to 54 cents was what they guided. 58 was the estimate, and the fiscal year EPS guide, the fiscal year 20 EPS guidance was a little bit light. So between the light Q4 EPS and the light EPS guidance, though that's the headline here. They also are raising their quarterly dividend from 19.5 cents a share to 23 cents a share, and they're adding $1.5 billion to their buyback. So those two headlines help, but I think the EPS misses for both the quarter and the guidance is what we're going to focus on here.
They finally split that stock, huh? I think wasn't it a much higher price stock? I'll have to go back and take a look, but I've seen it at $50 here, and I know it didn't have a big decline. They got real excited on the report. They took it up, they took it down here, currently trading up 63 cents at 50.25. We'll just look to the last days of price action here. And let's see, you got to take out this guy or gal standing at 50.60. You've had not yesterday's high, but 1, 2, 3, 4, 5 highs in a row right at 50.60. So use that as resistance. The recent high of the move, 50.66. So right there, take out your sellers, room to go on the upside, coming back on the downside. The area of support that you want to keep an eye on is no doubt 59 or 49.33. That splits the lows from the last two sessions. And then also in the middle of the month, you had a bunch of lows just at 49. So 49, let's call it 49 to 50.66, your trading range today in TJX.
All right, so a mixed report there from TJX. Best Buy doing a little bit better. Best Buy reported earlier this morning a Q4 adjusted EPS of $2.72 versus a $2.57 estimate, so a beat on the EPS for Best Buy. Their sales beat as well, 14.8 versus $14.7 billion, so beats on the top and bottom line in the Q4 for Best Buy. The Q1 adjusted EPS guidance that they gave was mostly in line, or actually was higher than estimates, and the fiscal year EPS guidance that they gave was in line there as well. So pretty much in line on the guidance and higher on the earnings.
Yeah, not giving anything back. Well, it's giving back 50 cents here. Your pre-market high, 67.50. Still hanging out at 67 even. It just seems like in the last half hour, 45 minutes, every time it got up near 67.50, someone peppered it and brought it back down. Perhaps need to mop up that seller. You have you also have your December high at 67.56. So I'll use that as a target. You definitely want to see it get through that, go 67.75, 68, 68.5 to continue the move. I mean, I know they are different here than Walmart, but just bring it. Walmart, had the gap. It did not go. It gapped and it faded and is now actually below the area was before it had the great report. So we'll see if that is a trend here in the retailers to fade the pop.
And still very, very early, especially in TJX, which has been out for like 10 minutes. So we'll see how those develop here later in the morning. But let's bring on our guest today, our retail expert, Ryan Craver. He's the founder of Commerce Canal. So we'll be right back in a moment here with Mr. Craver to break down all the retail stocks. And welcome back, everyone, to Pre-Market Prep. Spencer Israel, Joel Elconin, now joined by Ryan Craver, our retail expert, founder of Commerce Canal. Ryan, how's it going this morning?
Fantastic. Good morning, guys. How are you?
Good
How
morning.
is everyone?
We're doing all right. We're doing all right. We got a lot to get to between retail, and we have two specifically reporting this morning, Best Buy and TJX. So give us your initial thoughts on both of those.
Yeah, so Best Buy was the first one to come out.
Yes.
I think it's definitely a relief rally pre-market. There's not a ton to love here. I mean, granted, they beat the comp sale expectations that they had coming, but the only strong thing I could see in that report is that their margin was flat year over year. So a lot of these retailers in December got scared as the sales started to decline, and their online was below 10%. Their consensus, or excuse me, their Q1 guidance is 0 to 1% comp. Not too exciting on the Best Buy front. In terms of TJX, I was shocked. I think that this +6 in terms of comp for Q4 is pretty amazing. You look at their margin, it was down a full percent year over year. So they obviously bought the quarter once they found out that December was going to be weak. But I think it's actually a very good number for TJX, despite the fact that they bought the quarter.
Why do you key in on comps more than anything else?
It's just generally a good understanding of how much traffic and how solid of their conversion is online in terms of, how many people are they bringing in and actually driving a sales comp. I'm not as worried about the profitability when we knew that December was relatively weak. I think as January bounced back in terms of consumer sentiment as well as the market, we will probably start to see some decent sales numbers both in January and February.
Ryan, I just wanted to ask you real quick. I mean, we had that really punk retail sales number for December in January here. Does that figure into your analysis at all? You think that was just a one-off, maybe because of the government shutdowns? How do you let that big macro data affect your analysis?
I think December is not something to forget about. I think the longer term quarterly numbers is what we should pay attention to. And with that said, if you remember, a quarter ago, we were sitting here talking about Target and Walmart having their best comps in 9 to 10 years. We probably won't see that for the foreseeable future, if ever again, as long as we're chatting. So I think we saw a very, very strong quarter in that lead up to Q4. Q4 is where the majority of the money is made in retail, and we saw some difficult comps, but seeing something like a +6 from a TJX is quite good.
All right, I just want to go back to this Walmart, and but I've never seen. I mean, I don't want to say never, but you had the report. I liked it. It faded. I mean, now it's back below where it was before the earnings. Do you think that this, I mean, first of all, look at the dynamics of that. You think they just overestimated the report? And do you think this could be a trend here going into the remainder of retail earnings season?
Yeah, Walmart completely rolled over. It gave back its complete run that it was looking at making back to all-time highs. The numbers were quite good. I think everyone's a little surprised by the deceleration in the online comps. We were used to the 60s and 50% year over year. We're now seeing the 30s pretty routinely, maybe into the low 40s. I think they still need to come up with a plan on the online side. If you look at the e-commerce business, Amazon's going to have roughly 47% of it in 2019, and Walmart's below 5%. So some of the stuff that I've speculated on is who are they going to tie up with to try and build that online piece of business. Not a huge fan of Walmart. As you know, I'm a big fan of those that have the big moats. So, Costco is one that has a major moat with the membership base, and I think that they'll continue to do quite well as they push into online because it hasn't been a significant driver for them previously.
All right, Ryan, I want to bring on this chart that you are always kind enough to share with us when you come on this show. And so it's essentially, if I can intro it real quickly, it is a breakdown of year-over-year comp growth across the dozen or so major retailers. Is that correct? Every bar on this chart represents a separate quarter, and that's showing their comps growth?
Yes, completely. So I like to pull a full couple of years just to see where the trends in spend are shifting to. I think what we've seen over the last couple of years is a lot of spend is shifting to the off-price guys. So TJ Maxx, Ross, Burlington, as we've seen struggles with the department stores. You probably noticed I have pulled off Sears Holdings despite its lifeline that's been thrown. But I think we'll continue to see the long eventual decline of department stores, and you can see it in this chart.
Why do you include Nordstrom Rack and Sam's Club on here?
Just because the one big competitor within Costco's world is Sam's Club, and they're owned by Walmart. Walmart continues to split them out, so I think it's worthwhile to take a look at that. In terms of Nordstrom Rack being on there, as well as the full line stores, the full line stores used to drive the bus, but about 2-3 years ago, the Rack stores started to drive the bus. So that's where all their comp increases have been.
So can you interpret this chart for us now? What are the biggest things that stick out to you?
Top things that stick out to me is will we continue to see off-price drive the majority of the retail sales comp increases? Will we still see some dollar stores lose some of the momentum that they've had? And if we do, I'm still a big fan of the off-price stores gaining more and more market share from those guys like the department stores. If Costco comes out with some blowout numbers, I still think the warehouse play is a fantastic play versus the mass department stores, the mass retailers like Target and Walmart.
And the thing with Costco is, you can't really get that stuff delivered, right? I mean, you're buying. I mean, I know whenever I go there, I spend quite a bit of money, and I want it immediately. So I don't want to say they're Amazon proof, but the only bad thing about Amazon or Costco is, they don't always have the same stuff. You gotta make sure that when you buy something you like, you buy a bunch of it. Let's just go back and take a look at Macy's from yesterday. And, they're trying to rally, just sitting so close to its low of the move. It's kind of looking heavy. Thoughts on a letter M, Macy's?
Yeah, Macy's, I've never been a fan. I still believe that they've got a lot of grooming to do. So some closure of stores. I think that they came out with some cost cuts, some layoffs of VPs and stuff. I just think given where their price is today, given where the overall sentiment is on the name, I think that they've got to be a bit more drastic, whether it's more store closures, whether it's an acquisition of someone. A couple of years back, they had the Bluemercury acquisition, which helped. They need something else to be a catalyst to drive them higher. I don't think you're going to get, the type of gains you want in Macy's by them selling off retail stores, them closing stores with the same narrative that they've had for a while.
All right, are you ready for a really tough one that I don't even know if you follow that much? And I guess you could call it retail. It's not Weight Watchers. Did you see what?
I saw the headlines. Boy, they got slaughtered, and they had the
That's
whole
not retail,
narrative
Joel.
down.
Come on. It's not retail.
That's not retail, I guess, right?
It's
I'm
like-
kind of off the
it's
point on. I mean, they
like
do sell
consumer.
stuff. Is that? Do you have any comments on that, or just it's not something you follow?
I don't follow them, but there are some interesting names to me out there. The stocks that are heavily pushing into direct to consumer sales, so Canada Goose. I know a very popular one with your watchers is Duluth Holdings. So those guys I'm still quite bullish on. I think Amazon looks like a coiled spring right now. I think, given how many brands we represent on Amazon, they continue to drive strong growth within the advertising world. So I think they're fantastic. And then I think stamps.com.
Oh yeah,
Oh,
yeah. Let's
man.
talk about that one.
Let's
That that news was so overdone, so overdone. They
Why?
have on the
Why was it overdone? I mean, I know the price action is, but what do you have to refute what the street's saying about the stock?
Yeah, so the back end of all these brands that we support or represent is using stamps.com every single day to purchase USPS priority mail delivery packages through an API or a provider that is essentially a monopoly in the world of the USPS, so the Postal Service. So that spend is not going to go away. Now, because they aren't going to be exclusive, they've obviously taken down their EPS share earnings for the following year, and we will see a decline in that, but it's not going to go away. And then I think longer term, if they're going to start offering Amazon as a shipping choice, UPS, FedEx, and they're building their moat, they're going to be in a much better place. So I actually picked some up below 100 because I'm a long-term believer, and I continue to see how much spend flows through them.
Wait,
Putting your money where your mouth is.
wait, so can you interpret the STMP headline? Because the headline was that they are ending their exclusive partnership with the USPS. What exactly then does that mean?
It basically means that they previously were only truly offering the USPS as a shipping provider that you could buy any type of shipping service from. So all of our clients are forced to talk to stamps.com if they want to ship anything non-UPS, non-FedEx, non-Amazon shipping. Going forward, they're going to offer the full suite of shipping services. But I believe why they took down their EPS is because if they no longer have exclusivity, the USPS is giving them lower kickbacks on the revenue that they bring to them.
Okay. Yeah, that makes a little bit more sense now. I want, before we let you go, to ask you about the pair, Nike and Under Armour. And we were talking about Nike, of course, last few days ago. I guess it was last week now, with the Zion Williamson shoe incident. I don't know if that's being called Shoegate. If it's not, I'm making it that. But I felt that the sell-off was completely stupid and not related to the business in any way. Short term and long term, thoughts on Nike?
Nike, I'm still bullish on. I think it obviously trades at a premium, but we all know why. The Zion thing only helped them, didn't hurt them.
Really?
That's all I got.
Why is that?
It's just, he is the one name that everyone's talking about. He's the one guy that LeBron is leaving the crazy Lakers show to go view. I don't think it hurt them. I mean, we have short-term memories in this world of thousands of posts every single day in chat rooms.
That's true.
It's not a big deal.
And then the little brother of Nike, Under Armour. This is one I'm an owner of Under Armour at right around here. But give me. I know you've been bearish on it for a while. Are you still bearish?
Yeah, I was bearish on it when we met up on New York. I cannot get positive about this name. I really can't. I just don't see it, given where the distribution is, given how the brand doesn't do itself any favors by selling so much through the outlet channels. The Nikes and the Adidases of the world, they have a premium play, right? Adidas obviously has Yeezy, and Nike has a complete line that is only sold in Nike stores. Under Armour is just not there. Under Armour is used to being sold at Dick's Sporting Goods, TJ Maxx, etc. I can't get bullish on that name at these levels.
Ron, before I let you go, real quickly, you mentioned your portfolio there. Do you buy other things besides retail stocks? Do you kind of diversify? And the other question is, you mentioned the stocks, the stamp.com. Anything else you've been picking up?
I'm given where our career is and all of our clients, I'm a huge holder of Amazon. Like I said, I think it's a cold spring. I do have Costco. So I follow a lot of the retail. The only other big retail name that I'm into, and it looks like it's in the chat, is Lululemon. So I'm very bullish on.
Yeah, could you comment on that? Wow, this thing looks like it's coiled up here, ready to go. Comments on Lulu, Target, yoga pants. What do you got on this one?
I think Lulu will continue to do well. You know, despite not having a CEO that stays longer than 2 years, they continue to have traction. They continue to drive new incremental business with men's. So they're doing a fantastic job. Some other big names that I'm a holder of is Shopify. Shopify is the only entry into .coms for small and medium-sized businesses as they expand into larger businesses. So I'm actually a big fan.
Shop is hot. Shop is real hot.
Yeah, man. I don't know what to do about them. Just keep moving up the stops and just
There you go. All right. Well, glad to have you on. Spencer, you want to wrap things
Ryan
up?
Craver has been on with us. He's a retail expert, founder of Commerce Canal. As always, Ryan, thanks for your insights, and we'll speak to you probably next quarter.
Thank you, gentlemen.
All
Talk
right.
soon.
All right.
All right. We're quiet here, Spencer. I can't really shake up the futures here. 27.85.75 is your last print. That's down 5.75. On the upside, your close 93.25 stands as your pre-market high, 27.97. That is your all-time closing high of the move. Spencer, could you bring up a little bit a longer-term daily on the front month S&Ps here? Because I just want people to be able to go out to. Let's go out to. I like to get October and November here, because I just want to show what this 2,800 level has represented here. It acted as resistance back in October, a little bit higher than this, 28.23, 28.25. You also tested this area in November, 28.21.75 high. You flirted with it again in early December, and then you had the big decline here. So it's the whole numbers, the barriers, we're coming up to an expiration in the next 3 months. You definitely had a turn in the market with the December expiration. Just trying to see what's setting up here. I really think it's important for the S&Ps to close above that 2,800 and take out those areas. And I know a lot of people are just banking for this thing to go to new all-time highs on the hop here, but you just have to respect that resistance that's been in the market here since early October. So what do we got? 6 minutes here. Where do you want to go?
Let's go back to a couple more earnings that I really wanted to get to on my list. One of them being Lowe's, LOW. They're reporting this morning Q4 adjusted EPS of 80 cents, beat by a penny, and sales of $15.64 versus $15.75 billion. So a sales miss and a very slight EPS beat for Lowe's. They did give guidance as well. Their fiscal year EPS guidance. Their fiscal year EPS guidance is in line, and they guided that their comps will be up about 3%. So that is a big move.
They go contra a lot, folks. I've seen that happen. And this is just not the first quarter. This is a big move here, up 5.16. Very big move here for Lowe's. So I think I do own Lowe's in one of my portfolios. I don't know. I don't want to look because I'll probably sell it. But you just hit 110.45. Boom. That is a big move for the stock. We haven't been up in this area since December. So if you're looking for another target, we're just continuing to make new highs here. Let's go back to October, where you had a 115.63 high, and I don't see that coming into play. I guess the only thing I would be a little bit leery or potential resistance here, I'd like to see what happens at 111. You had two highs on October 9th at 110.98. And then the following day, 111.11. So seller lurking those 2 days at that area. That's still a stick away. So long it takes to get maybe look like a little bit of a fade there. Will A is asking about Best Buy. We've already covered that. And 67.50. I saw it just perk its head up there again. Look at your 15-minute chart, Will, and you can see there's just been someone standing there at 67.50 here since 8:15 this morning. So like to get it above that to get the continuation move. Below that, you might have a little back and fill here in shares of Best Buy.
All right, I want to move on to a couple of ratings before we head out for the day. The only upgrade that really caught my eye this morning was UBS is upgrading Philip Morris PM from neutral to buy.
PM. Boy, we haven't talked about that stock. I think
No.
that it might have gotten some favorable ink in Barron's over the weekend. Let me look. Well, that's a pretty looking chart there, huh? Look at that. Holy moly. And up another stick today. That's a big move. Let's see what we got on the dailies here. It's up $1.01. Let's get through 87.70 here, folks. Yesterday's high, 87.47. 87.70 is your 2-day high. So look for continuation of the move through that area. Looking for a little bit more. 88.52 was your December 4th high, but this is just a ratings change. This is not major fundamental from the company.
Right,
So
right.
ratings changes tend not to have its lasting effect as when it earnings or something along those lines. Someone here has mentioned Roku. Is that over $70 yet? Let me take a look.
Probably.
No, not yet.
It'll be there soon.
Take a little breather here. Let's see, where are we trading at right now in Roku? We're trading 64.36. If you're trying to protect profits in this one, keep an eye just under $63. I'd give it that stop to there because you're low on that earnings day, 63.22. The next day's low, 63.34. Volume is faded a little bit here. You had 48 million trade on that big up day, then 22 million, 13 million yesterday. So I don't know if you're running out of the buyers yet here or not, but protecting profits under 63 in that one.
And then the only downgrade of note this morning, all of them, or pretty much all of them, are just earnings reactions. The one that isn't that caught my eye was Chubb catching a downgrade from Credit Suisse this morning to underperform. That's ticker CB.
And that's getting hit here. $2 down $2. But is there any volume on this?
No.
Nah. Chubby's that's a tough one here. Couple hundred shares have traded, and we're trading at 33.11. See if I can find anything on the dailies here. I see a low of 133.19. So you want to see this thing get off the mat real quickly, or you may be getting a look here at 131.90 was your February 15th low.
All right, one more minute here. Let's get to some tickers in the chat.
Sure.
Someone asking about, well, we looked at Philip Morris. Let's look at MO, Altria.
I'm sorry, what was the symbol?
MO.
MO. Okay. Altria, nice move here. Nice rally. Just coming off the bottom here. I think I'm not really seeing anything in the dailies. You're trading up 54 cents. Tight ranges the last few days. So above we're trading up 54 cents. Maybe a whole number. Take a look to see if you have any daily highs at 53. And you don't, I guess my next target for that would be on the upside, 53.5. That splits a pair of highs from December 14th and December 17th.
All right, that will do it for today's show. Thank you to all of you who joined us both on YouTube and in our chat on premarket.benzinga.com, the latter of which is active throughout the day. If you missed any part of our show, catch our podcast on iTunes, SoundCloud, Stitcher, TuneIn, or Google Podcasts, or just rewatch the show on youtube.com/BenzingaTV. Thank you to Ryan Craver, who joined us today. Please remember that all the information from our show is for informational purposes only, not meant for investing advice. On tomorrow's show, we will be joined by Kenny Glick, one of the most colorful analysts on the screen.
Analyst.
All right.
Oh my God.
All right. That was a stretch.
Kenny,
That was a
I gotta
stretch.
write this down.
That was a
Kenny
stretch.
Glick is an analyst.
That was a stretch.
Okay.
That was a stretch.
I got it. I like that one, Spencer.
All right, he'll join us on tomorrow's show, and we'll also be rejoined by our pal Dennis Dick, who hopefully will be back from vacation by then. In the meantime, everyone have a good day, and we'll see you on Thursday.